Want to show you something. Cute little condo in Toronto's Harbourfront neighborhood, bustling part of the city. It goes on the market. In the summer of 2022, the sellers put it up for $480,000. It didn't sell. Early 2023, it's back on the market for $460K. No luck. Later that year, posted again at $450K, still nothing, and a few months ago, the sellers tried again at $430,000. No takers. This condo was sitting on the market for more than 400 days without a sale. Right now, in Canada's biggest cities, there's a ton of condos like this struggling to sell. Condo sales in Toronto, for example, haven't been this low since the financial crisis in 2009.
Condo flippers are getting absolutely slaughtered right now.
In majority of these towers, they are half empty.
Nobody wants these condos, folks.
And here we are in the middle of a housing crisis. It's never been harder to get into the market. And so many of these condos spend so much time sitting empty. Why? That studio we just showed you, we're pretty sure an investor bought it, because just a month after it did finally sell for $80K under its original asking price, it was listed for rent.
I think the number one problem is that most of the condos that are listed on the market are investor units.
Investors have really thrown the market out of whack. And when I say investor, I don't want you to think of some, faceless corporation or ultra-wealthy real estate mogul. According to Stats Canada, the typical condo landlord here is actually a, quote, middle-aged, middle-class couple. And for these people, the intention is usually to cover their monthly mortgage payments by renting it out. For decades, this was considered a pretty smart move. Condos were cheap relative to every other kind of property, but their value was rising. And the average rent that landlords could charge tenants was rising steadily too. But now?
It's changed quite drastically. I mean, anecdotally, with my own investors, I shy away from new condos just because of the numbers just don't really make any sense.
Yes, the numbers don't make sense, which has led to an insane number of condos being put up for sale, flooding the market in a way we haven't really seen before. I'll show you what I mean. Let's compare what a condo investment in Toronto looked like in 2016 to today. So according to the Toronto Real Estate Board, the average price of a one-bedroom condo back then in 2016 was about $300,000. And with 2016 interest rates, about 2.7%, that worked out to a mortgage payment of about $1,100 a month. Rent for the average one-bedroom apartment at that time was about $1,660. Not bad from an investor point of view. Even with maintenance fees, property taxes, that condo is essentially paying for itself while you build equity. Now, what if you were to buy a one-bedroom condo today in Toronto? That could cost you about $550,000, so prices have very clearly gone up, but so have interest rates. The carrying costs on a property are far higher than they ever used to be. Well, not ever, but in recent memory. At current rates, 6.8%. Maybe now you're paying more than $3,000 a month for your mortgage payment alone. Then you've got, property taxes, maintenance fees, and the average rent for a unit like that, about $2,400 a month. You're now paying out of pocket.
The average investor is going to be short about $1,000 a month now, right? And that's a tough pill to swallow.
So jack up the rent, right? Well, it's not that easy. Paying more than $3,000 a month for a one-bedroom just isn't possible for most people. The market can only bear so much.
No one will pay the rent that would allow you not to go broke owning that property.
And analysts we spoke to say they're seeing more and more people leaving the rental market in Toronto because things are already too expensive. So they move back in with family or they couch surf. Now, historically, the average investor might try to stick this kind of thing out because the assumption has always been, even if you're losing money in the short term, in the long run, you'll still come out on top.
A lot of investors would have had no problem being short $1,000 a month if their unit's going up by 10 grand a month, you know what I mean? Or 7 grand a month in terms of appreciation. But that's not happening.
Over the past couple of years, condo prices in many big cities have more or less stalled. And in some cases, depending on when these people bought, their investments might already have lost value. Condo prices in Toronto, for example, skyrocketed between 2017 and 2022. This was great for investors, but many wondered if they were actually becoming overvalued, if there were too many of these condos being built to sustain these prices. At the end of 2022, those prices started to drop, which is especially bad news for investors who've bought since then.
Now the renewal has come in and you're losing a lot of money, but you've actually come to realize in the last 12 months, the price of that condo has probably dropped about $40,000. So you're starting to enter into a state of actual fear.
So no wonder you have so many mom and pop landlords now saying, enough is enough. I'm going to try to sell before I lose any more money. But there's also another group of investors, the pre-construction buyers. And for a lot of them, things are even more dire.
There's some buildings where up to as many as 12 or 15% of the buyers are saying, no, I'm not going to close. Okay, I'm walking away from my deposit.
In the past, in a city like Toronto, you could pretty reliably put money down on a pre-construction condo, wait 2 to 5 years till it was built, and then sell that unit before anyone ever moved in. In most cases, the value of that investment would go up 20, 30, even 40% without you having to do much at all.
From the year 2000 through to, right about to 2020, that was true. But now it's not true. That's absolutely not true.
So these units are completing and they're not worth what the investors paid for them, right? So they paid $1,500 a square foot, but they're only worth $1,300 a square foot.
So some investors are trying to bail on a bad investment. Some can't afford the carrying costs, and lots of them are all in this situation at the same time. So you end up with a flood of condos on the market. But isn't that the very definition of a buyer's market? Like, isn't this great news for people who want to jump in? Well, it would be if these condos had actually been built for the people looking to buy. According to StatsCan, the average size of a new condo in Toronto has shrunk significantly over time. From 1981 to 1990, new condos were on average about 1,000 square feet. From 2016 to 2020, they were around 650 square feet, or about 40% smaller. And if you ask anyone who lives in the downtown core right now, 650 square feet actually feels pretty big.
This is what a 275 square foot condominium looks like in downtown Toronto.
Look how small this bedroom is in this Toronto condo for sale that I was showing.
This is the den. This little cutout in the wall is the den, okay? Doesn't even fit an entire table.
And yes, Toronto is definitely an extreme example here. But the analysts we spoke to say these tiny units have become more and more common since the early 2000s right across the country. And developing these smaller condos targeted specifically at investors who then turn them around for rent, that was a real business opportunity.
We needed rental housing. So basically what happened is that was filled by mom and pop investors buying condominiums and converting them to rentals.
They only had one single thing in mind, that they would be purchased by people who would be landlords.
Investors want small units. The yield is better. The price is lower. It's easier to qualify.
According to realtors, it's these teeny tiny investment condos that are currently flooding the market in places like the Greater Toronto area.
Broadly in the GTA, we're looking over 13,000. Majority of these suites are investor units that are listed for sale.
And if you think about it, if those condos were built for investors, just renting them out or flipping them, the focus probably wasn't on quality or functionality or families. Some of these places don't even have closets. According to the realtors we spoke to, investors aren't generally very choosy about whether the floor plan works, whether the finishes are first rate, or what the view looks like, because they have no intention of moving in. They just want the best value for their money. But if someone's taking their entire life savings and putting it into a home that they plan to live in for years, that's a pretty different story.
There was absolutely no thought given to the idea that anyone would buy that place, that sub 500 square foot condo, as a place to permanently live.
Right now, for example, in Toronto and Vancouver, 3/4 of larger condos, the ones, maybe more suitable for a family, built decades ago, those are being lived in by the people who own them. But for those much smaller condos built after 2016, with investors in mind, only about half are being lived in by owners. Remember that cute little studio that we showed you at the start that took 400 some days to sell? It was 330 square feet. Here's a 2-bedroom, 700 square foot unit in that same building. It sold earlier this month on the first try in just 13 days.
If we look at the large cohort of buyers right now, they're predominantly millennials that are looking to enter the market. If you're looking to start a family, it's really tough to start a family in a 1-bedroom condo. Or even if you don't have a family, if you are a millennial and you're a couple, let's say you have a dog, or if you work from home, you need that additional space to be able to either work or raise a family or even just have a guest bedroom. So when we look at the amount of inventory that's available, there's just really nothing. There aren't a lot of options out there.
What ended up happening is we only built one kind of product for the last 5 years. And it's possible when you only build one product that it can become mispriced. And that's what we're faced with right now.
This one's asking price is $420,000. For that price, would you live in this bunk bed?
The analysts we spoke to all said they do expect the price of these smaller units to come down over the next 6 months or so. That doesn't make them any more ideal a place to start a family. But if the price made more sense, that takes some of the sting off, right? Either way, it seems both sides of the housing equation are stuck. Sellers driven to sell can't, and buyers don't like their options.